Welcome everybody to the Stock Market Brief Show. In today's video, we have an insightful one. We're going to be covering a variety of essential topics crucial for navigating the current market landscape. It's critical. It's always so critical. We're also going to be diving into the state of big picture charts and why they seem to be signaling some caution. We're going to be discussing the prevailing market conditions as why it's proving to be a challenging environment for swing trading, the importance of being alert for a gamma flip and its ramifications on the market will also be highlighted. We're going to be shedding light upon macro reports, providing you with some glimpse of what's on deck. Additionally, we're going to be exploring what the options market is projecting as the risk for the week and month ahead. So stay tuned as we unravel these topics on today's show. Let's get into it. All right, people, welcome back to the show. We're going to start here taking a look at month-to-date performance. It's a new month. It's October. Yahoo! And it's a new quarter. Yahoo! And I just want to call attention to these intermarket assets because they continue to be more important. Now, from a seasonality standpoint, September is one of the worst months from a seasonality standpoint. And you can see there's a lot of red on the screen, so it really fit the seasonality script. But there's going to be important assets to continue to watch because if they continue to rise, they can still put pressure on the broader markets. And those assets are similar, or are crude oil, right? So crude oil, when this goes up, energy stocks typically perform well too. Those both are up. But the big ones here is the 10-year yield and the dollar. Now, from a seasonality standpoint, September is pretty strong for the dollar. But yes, yields, so the 10-year yield, we can look at 10x as a proxy. And then the dollar was up. And when you have these things go up hand in hand, it does seem to put pressure on the broader market, except for, obviously, oil. Oil has been doing quite well there too as well. Now, if we take a look at the screenshot for month-to-date performance of the heat map of the S&P 500, what you notice here is, well, a lot of red on the screen. Apple was down a whopping 8%. Google was down almost 4%. Amazon 6%. The one that snuck into the green right there as far as large market cap was Meta, and Nvidia was down double digits percent there too as well. But I want to remind you all, from a year-to-date standpoint, there is still some massive gains here. Nvidia is still up 197%. Microsoft is up 30%. Apple's up 30%. Amazon's up 50%. Tesla's up over 100%. And Meta also is up 150%. So it goes to show you that these things can drive order flow in the S&P 500. So they're up a lot still. What we noticed this last month, is we saw some weakness, and this really does put pressure on the overall market. So it's going to continue to be important to watch these, and we'll get into some big picture charts of some of these names. Let's take a look at what was in the news this week. Neil Kashkari of the Federal Reserve expressed uncertainty over whether interest rates are high enough to control inflation, emphasizing the need for possibly higher rates. Okie dokie. Treasury Secretary Janet Yellen, she warned of the economic repercussions of a government shutdown, highlighting the risk of a recession. Well, we did have Congress pass a bill to keep the government open, averting that shutdown. Now, durable good orders, they did come out and they saw an unexpected rise in August, hinting at economic improvement, in quotes. And then we also had the U.S. economy experienced a 2.1% growth in the second quarter, showing some resilience amidst rising inflation, raising interest rates and inflation, as reported there by MarketWatch, I believe it was. Lastly, the PCE price index, the Fed's favored inflation indicator, rose less than expected in August, signaling progress in the fight against inflation. Taking a look at next week, we also have quite a bit of macro data coming out starting Monday. Shortly after the market open, we have ISM manufacturing PMI. Tuesday, we got JOLTS job openings. 7 a.m. Wednesday, we have ISM services PMI. Thursday, not too much going on. And then Friday, we got non-farm payroll. So it's going to be a busy week in the markets from a macro standpoint. Also to note, on Monday, we also have Powell coming out at 8 a.m. Looks like he'll be talking along other Fed members. As far as earnings go, we don't have that much on deck, but I want to prepare everybody for earnings season to come right back around. We're going to have banks reporting earnings first, and you can see they're about 10 days out. We're going to get the big ones like BlackRock, Wells Fargo, Citigroup, JPM, okay, and so forth. But we'll be following that, so make sure if you haven't done so already, subscribe to the channel, and we'll talk more about that when the time comes closer. We're going to hop into the S&P 500 and really get a good glimpse of what's taking place in these markets from multiple different time frames. All righty then, ladies and gentlemen, we're looking at the quarterly chart of the S&P 500, the SPX, the biggest product out there. Hallelujah. Take a look here at a pretty bearish looking candle overall. But there are some positive signs. One of the positive signs is we're still above a quarterly rising 5 EMA. Now, when we get below that, things can cause havoc. Actually, if you look at a bigger chart, we'll show this one. When we had quarterly closes below the weekly 5 EMA, the Fed typically steps in. And as it stands right now, the Fed is not stepping in, but they did come in with some intervention when we were kind of coming back above it during the banking crisis when it happened. Also to note, we had our first bearish crossover in a long time on the price momentum oscillator. And this is using a rate of change, which is something that I like. It's a little bit quicker than the MACD. Now, if I take a look here, when we take a look where else it has happened, for the last bearish crossover, it was in 2007, and the one prior to that was in 2001. So if the trend continues, this could lead to obviously some more selling. Otherwise, we want to see this thing whipsaw back up. If you are bullish, that would be the more beneficial thing for most people, is to see the market start to see some strength. Okay, if we take a look now at the S&P 500 expected moves, this is going to be for the monthly, the line that's solid, and then the dash was the quarterly. We actually finished outside of the monthly expected move, but well within the quarterly expected move for this last quarter. I'm going to update you on the levels, so screenshot this if you want to add this to your S&P 500 chart. You'll see the solid thin lines. That is going to be right here. Those are going to be the monthly expected moves. And then we have the dash lines down here. Those are going to be upper and lower levels for the quarterly expected moves. So if we do get a blowout quarter and it ends up being really bad, take a look right under 4,000. That's at 3,973 would be the lower quarterly expected move. If we start getting more sell side for the month, start looking at the lower monthly expected move, and that is at 4,115. If we start seeing some strength to the upside, we can pay attention to the obviously the upper levels, which is 4,460, and then also for the quarterly expected move is 4,602. Ooh. And if we take a look at the weekly time frame, I want to just call out here that we did have a bearish crossover on the price momentum even on the weekly time frame, and we actually haven't had a crossover since late October. And when late October came into November of the bullish crossover, that did project, continued strength in the overall market. So is this going to be, a whipsaw, or is this just the early indication that even if we bounce up to say 4,400, right, is it going to continue its trend down until we get that bullish crossover? There's always the possibility for a bounce in these cases. I've always noticed when we get extended from the weekly 5 EMA, you get quick snapbacks. So for example, we got really extended right here, and what did we do? We snapped back, right? Doesn't mean you can't go up and then come right back down, but we snapped down from, we closed out here, and then we snapped back into it. We snapped way outside of it here and came right back in. Out here, we snap back. So over here, watch for the weekly 5 EMA reconnect. That's always possible. As the new week starts, this should come down slightly. So always continue to watch where that level is. Let's take a look here at the SPX on the daily chart now. And as you'll notice, I have some orange indications right over here. That's the upper weekly and lower weekly expected moves. That's what the options market is implying as far as risk going into the next week. And as you can see, we hit that lower channel that we pointed out, came into one of our gamma exposure levels, and we started to sell out. Now the options market is saying, hey, look at 42.08 to the downside, potentially 43.68 to the upside into next week. As it stands, we're still within a rising channel, and we're still above these prior areas of resistance, which can become support, which we kind of saw last week. Now, this is not the most pristine environment for swing traders, and I'll explain why, because there are two things that I've been noticing here where you get a lot more failed breakouts, a lot more volatility. And the first one I want to talk about is how dealers are positioned from a gamma standpoint. And I want to make this as simple as possible. I'm no volatility expert here. I can't walk you through the mathematics, but what I can tell you is what I've seen take place and what kind of happens from a dealer or market maker perspective when we're in a negative gamma state or we are in a positive gamma state. So if I just draw this out and say this right here, this line, that's the flip line, okay? This means that, when price is above this area, right, above this line, that means we're in a positive gamma state. And then when we're below the line, that means we're in a negative gamma state. Well, right now, we are actually in a negative gamma state. So what does it mean to be in a positive state? Well, when traders or market makers have a positive gamma position, they're net long gamma. Okay, so in this scenario, if the underlying asset of the S&P 500 is going up, dealers are going to sell into it to remain delta neutral. But if the underlying asset goes down, dealers will buy to remain delta neutral. So this action of buying low and selling high tends to stabilize the market and just reduce the volatility, kind of acting as a counterbalance force to price movements in the underlying asset. Now, conversely, if you are in a negative gamma state, that means we are, over here on this specific line. This is when traders or market makers have a negative gamma position. They are net short gamma. So in this scenario, if the underlying asset is going up, dealers are going to need to buy more into this asset. But if the underlying asset goes down, dealers will need to sell into that. So this can lead to more pronounced price movements, potentially exaggerating the volatility as dealers and buyers buying high and selling low. So this really amplifies market trends. It doesn't mean that market goes straight down. What it means is you typically see higher amounts of volatility. And when you're in an environment with higher amounts of volatility, why this might not be great for swing traders is because what, swing traders might do, they might look for, price action to be contracting up, and then they play the breakout trade of it with a tight stop loss. However, when a high volatile market, you can see breakouts take place, but then quick snapbacks like such. Or you might see price action do something like this where it breaks down and snaps back up really, really quickly. It's a very choppy environment to be a part of. Now, this right here could be a confusing chart to look at, but there are the levels of what we need to pay attention to for the next flips, for the next expiration, and the total level as well. So I drew that on this specific screen for the S&P 500 daily. So the total gamma exposure flip, so when we're in a more of a positive state, it's 4453 as it stands right now for the total. Next flip, so that means the next the next expiration. Okay, the next expiration is obviously a little bit further closer down, which is at 43.19. So we really want to get above this 44.53 as it stands right now. Now, understand that even if we get above this level, it really needs to start breaking away. So when you mark these levels on your screen, what I like to do is go into the smaller time frames, and then you'll notice that when dealers have to reposition, you will see spikes, large spikes of heavy volume as price starts to break away from these levels. And it goes to the downside too. When you see, like, for example, a lower weekly expected move or daily expected move, price comes down here, and then all of a sudden we start breaking from it. This is dynamic hedging, and what you'll pay attention to on smaller time frames is you'll see large bouts of volume come out of nowhere as dealers are kind of repositioning there. So that's one of the cues that I like to look at from more of an intraday perspective. Okay, so that's one of the reasons, right? Now I want to get to another thing that you can look at to be more, to have more ideals in your favor if you are a swing trader or if you're a breakout trader like myself. The next one is something as simple as just going into the smaller time frame chart. The 15-minute is the one that I prefer. And then you apply the 5-day moving average, which on this time frame, it's a 130-period simple moving average. And you just watch where the trend is. The trend currently is down as price is below it. So if the trend is bearish, that means it's a declining 5-day moving average and price is below it. You have two bearish things in your favor. One, we're in a negative gamma state. And then two, we're in a negative, short-term bearish trend here. So what you'll see here is obviously a lot more volatile swings. So to start getting a little bit more bullish, what would you like to see? Well, I say this on all these videos. What you'll like to see is price to get back up around the 5-day moving average, which it's doing. And you want it to see it hold as the 5-day moving average starts to flatten out to go to a neutral trend. Right? Neutral little spaghetti trend. But then you want to see, obviously, price start breaking up higher and forming a series of higher highs, okay, and higher lows like such. And the 5-day moving average start to incline again. So when you have an inclining 5-day moving average, you have a positive short-term trend. And when you're in a positive gamma state, you're having dealers buy the dip. So you got support from multiple different angles here. Now going into tomorrow's trading session, Monday, October 2nd, I have some levels out here. I put spot GEX levels on the screen, and the white lines are the lower daily expected moves. That's why it says DEM. So 423.77, 431.19 to the upside, and you can plan out trades around these specific levels. So if we get below 427, right, and dealers have to hedge more, more to the downside, start looking at the lower levels right around 423.77. And then if we start obviously getting up here, we have some resistance still at 432, which was, we saw that last week. And as price came up to it, just about tagged it, came up to it, and then price started pushing it back down, okay? So there's a couple of levels to watch out for. As far as the weekly expected moves go on the SPY, 438 to the upside, 421 to the downside. If you want these levels, delivered to you via Discord, I have the Swing Trader, Patreon, and you could, if you sign up for my Patreon, you can get obviously access to the Discord. That's where I post everything. I don't post anything on Patreon, but you could get access to all these daily expected moves, weekly expected moves, monthly expected moves, quarterly expected moves, just to have an idea of what the options markets are pricing in as far as risk for the month ahead. Okay, so we went through a lot, but I want to now hop into some big picture charts, because a lot of these big picture charts from a monthly or quarterly perspective can give us insights into some key levels and areas that if price breaks down from, we need to just be on guard, because things can obviously get worse. So the first one I want to look at is the BKX. This is the KBW banking index. This thing was down almost 4% on the month, and it is barely hanging on to this lower trend line here. Okay, so continue to watch this. If we start breaking down, we still have a declining monthly 5 EMA. So even if we get a bounce and this thing starts moving down, it could spell out bad news, as this is a pretty large banking index. The NYSE composite is also holding on to a lower trend line here, as this price is flagging, and then from a greater perspective, it is wedging, and a breakdown from here might send us to the lower Bollinger Band, which could spell out, pretty significant volatility down to around 14,000 in the broader market. If I look at the IWM from a monthly perspective, this was down around roughly 6%, and this is still channeling right here in this bearish type flag scenario. And you'll notice the Bollinger Bands are starting to coil up. And as we always say, is that markets move between contraction, right, when they get tight, and then expansion, and then volatility picks up, and then markets contract again, right? They get tight, and then they expand again. That's what markets do on all different time frames from a fractal perspective. So we'll continue to watch here. If it starts breaking down, pay attention to the lower Bollinger Band, which is roughly at about 162, okay? Now I want to hop into the quarterly chart of IWM. You can get a cleaner picture here, zoomed in. As you can see, we have a pretty bearish looking candle for the quarterly, right? It was down 5.18% on the quarter. And if we start breaking down the low, it might continue the flush to the prior quarterly low candle. So start looking at the low at around 174.29 to get cracked. It doesn't necessarily mean that it has to hold down there. If you're more bullish, you want to see price get back above that 179.39 from the quarterly perspective, as this is turning down. You have a bearish crossover that's been in place on the price momentum oscillator there too for a while. As far as the Qs go, the quarterly candle, if we're just looking at price action, not the greatest looking candle. So you want to be back above 370 and close above there from a quarterly perspective to be more bullish. And that opens the door to retouch the high. That's around 387.42. But if we start cracking down from the low of the candle, that opens the door to the inclining 5 quarterly EMA, which currently is at 335.22. But as the new quarter starts, this can bump up a little bit here. So maybe maybe around that 340 marker. So notice we had a big authoritative green candle here, big authoritative candle here, and now the body of the candle is getting a little bit smaller, meaning the momentum here is slowly dying off. And very similar how you saw the downside, right? Pretty big authoritative candle, very big authoritative candle, smaller body, even smaller body, told us that the momentum was slowing down, and then we started breaking to the other upside with more authoritative type candles. Taking a look at copper here, copper looks to be flagging on the monthly perspective. A breakout in copper would, in my opinion, be pretty bullish for the overall markets. However, just note that we are kind of seeing this trend right here that if it does break down, it might send us to this lower area around $3.25 to $3 where we saw prior resistance turn into support. So potentially a retest. Now, if we start breaking above this 4 and we start moving back up to a prior swing high, we've noticed the correlation between copper and the S&P 500, and that could be proved to be pretty bullish overall for the markets. Now, the 10-year yield has been on a monster run. From a quarterly perspective, we're moving into that overbought condition, but overbought can stay overbought for a while. So I wanted to map out some levels of interest here from a resistance standpoint if we get continued upside. And that level is right at about 50, which is about 5% on the 10-year yield, where you can see prior resistance was also prior support. And when we broke down from that level, you can see that it really flushed through here. So this area in here, if the 10-year yield wants to continue to rise, could be an area where it starts to take a little bit of a backseat. Now, if this were the case, I can flip over to something like the TLT. And I've also noticed here on the TLT, looking at the quarterly chart, there was support right at around 80, and that support was once resistance. So if price continues to push down here as yields rise, this could be a zone from this 70 to 80 range where it might be a good opportunity to start getting into a potential position for a longer term potential position in bonds, okay? If we take a look at utilities, as bonds are going down, this is really hurting three sectors, and those sectors are one, utilities. So utilities took a big crack at 9.22% to the downside. Notice how the bodies of the candle were coiling up, and when we cracked down through that low, we saw that flush right here. That's why it's important to pay attention to these bigger time frames. Okay, but it's not just utilities as bonds is getting crushed. Okay, and by the way, if bonds start to bounce from this area, that could be good, obviously, for utilities. So this is why I'm also calling this out. Real estate. So real estate XLRE we're using as the proxy. This is another one that's getting hurt as yields continue to rise. I mean, that makes sense. I'm not going to dig too much into the, why that might be, but we saw authoritative candles here, smaller bodies trying to kind of slowly rise, and then you have another authoritative red candle on an uptick there in volume, and we close below the low. So this thing, if bond yields want to continue to rise, could present itself further downside in real estate or REITs, okay? Another one that got hit was consumer staples as bonds are falling. So these are just important assets to obviously overall watch, but this was down 6.6%. And overall, it's looking like it's getting stuck at around this 74. So if we can kind of recoup this level and you see price do that, this could be, a long-term quarterly, just period of consolidation from just a bigger term perspective. And then if we break above 74, we might see consumer staple stocks really take a run. But notice here how we had an authoritative candle, this big green one. Then you have a smaller body, indecision, and then even a smaller body that represents indecision. And then we finally got some follow through. It broke down from the low, and we saw that flush take place, and we closed below even the prior quarterly candle there too as well. So if this wants to continue to the downside, start paying attention to the lower area, which is roughly around $66. And that acted as prior areas of support, which means that this would just be in a very longer term type Darvis box, I guess you can call it. Now, as bonds have been getting crushed, it hurts those three sectors, but what sectors is it helping as yields are rising? Well, take a look at the CRB. This is the commodities index, which one of the largest portions of commodities is energy, and energy's been doing good, or oil, right? And this one had a blowout quarter, 8.6%, as price has been kind of fading down, right? As inflation's been fading. Well, now inflation's picking back up again as we broke above the previous two quarterly high candles right here. So are we going to see continued upside in this, which could continue to obviously put pressure on these big three sectors and then overall the markets? Let's take a look at the dollar. We talked about this earlier, how a rising dollar can also put pressure on the S&P 500 and various commodities. The dollar is notoriously strong in September, and this was up 3.15%, getting and closing above the prior quarterly high candle. And you can see this thing looks pretty strong overall, but you have a large range candle. So we outside, a whole outside trading candle. It's actually engulfing the from the low to the high, not the body. It's engulfing the last two complete quarters. So just overall, a lot of market volatility in the dollar overall. Okay, if we continue on, I want to point out the large market cap names that I'm starting to see some pretty bearish looking candles, which doesn't mean that there's any confirmation, but this could spell out some, problems potentially. So Nvidia on the quarterly candle, quarterly time frame, what you'll notice here is big authoritative candles. And then this last quarter is what? Well, it's a smaller body, right? But you have a large upper wick, which means it was very bullish. And then it met up with some sellers up top and they pushed price all the way back down. It still managed to finish up 2.84% on the quarter, but where you can get What level you can watch for potential more downside is if it flushes down the low of this quarterly candle, which is roughly around 400. More specifically, it's 403 and 8 cents, because these type of candles, they can mark reversal points in price assets. And it doesn't mean it has to happen right away. I've seen times where price goes back up, but yet this marked the high, and then it takes a while, and then eventually, when you forget about it 4 or 5 quarters later, the 400 area, or whatever level is broke, and then all of a sudden you see a flush, okay? TSM. So another gigantic market cap name. This was an inside trading quarter, but you can see the body itself is known as a bearish engulfing. So the body of the candle, it started up higher and then closed well below it. And this could mark potential reversal points too. But what you want to watch for is the low to get broke, 84.01, and then it can go test the prior low of the prior quarter. So you'd have to pull that up. I don't have the exact number in front of me right now, but it also can potentially lead to a more of a potential flush. So those would be the levels here. Other than that, if we start moving up, you can start looking at the opening price of the prior quarter candle, and that can act as a potential area of resistance. And if we break above that, you can start to watch where we close in that prior quarter there too as well. So you're just looking at, open prices, close prices, and high and lows on these quarterly candles to mark out maybe bigger term swing trades. Now, if we take a look at the quarterly for Tesla, this is also kind of an important level that I really want people to pay attention to, and that's 260. We closed below it. So as it stands right now, we could be on, fragile ground. So back above 260 could be quite positive, but what you'll notice here is we had, a bullish quarter, right? Bullish quarter, big authoritative candles, and then we kind of started up higher and we closed a little bit lower here. And you'll notice that these trend lines, right? We have, 1 connection, 2 connection, 3 connection. We tapped here, and then right here is connected to here and is connected to these lows. So as it stands right now, you can really see price actions coiling up for a potential explosive move. So if we start breaking above the high of this candle, that opens the door for Tesla to start running back up. But if we start breaking down the low of that from a bigger term perspective, that opens the door to obviously go a lot lower. So those would be some key levels that I'm watching. If you want even more specific levels, I would even look at the open price of the quarterly candle, which was a 276.49. If we get above 260, maybe there's a trade in there to 276.50 as it stands. Now let's take a look at Amazon. So Amazon also has a shooting star candle. This is obviously a large market cap name. And I just wanted to point out there's been other times where we had shooting candles on moves that go to the upside. So you have authoritative candles, smaller bodies, a little bit of indecision. And then what you'll notice here is when we did flush, right? We got a big flush, closed up higher, but then you had this big massive flush. You saw this shooting star candle right here. Boom, we flushed down. So that's why it's important to just pay attention to this type of price data. So if we start breaking down the low 123.04, that could very well bring us to, the prior, little area right here where we closed, we opened, and then we had a high point. So that area right around, probably roughly around 110, you'd have to pull it up yourself. But that could be a flushing point down into that area for the price of Amazon, or potentially even lower. If we take a look at something like HYG, this is high yield, and this has a very strong correlation to the S&P 500. And you really get a sense of how momentum is slowing down on this bounce. So we need to see it obviously pick up. But you'll see here, big authoritative candles, and then you have a smaller body, small body, a smaller body, and a small body. And then all of a sudden, right, as expansion leads to contraction, it gets tighter, we saw expansion again. Okay, well now you have authoritative, and now you have 2 quarters in a row of a very tight price action. And you can see here, this is, an indecision candle, a doji candle, but it has that higher upper wick. So if we start breaking down the low, which is 72.89, watch out for volatility to potentially pick up to get a bigger flush in high yield, which could be obviously bad for the markets. Now on the flip side of that, if we start breaking above the open price of the candle, which is 73.98, that could produce a potential pop where we can go test, prior areas of supply, maybe this prior high or this prior open price over here on HYG. Okay, if we continue on, junk is the same story, high correlation to the markets. If we take a look at transports also has a shooting star type candle. And transports, this makes sense to me. As oil continues to rise, this could be very bad for transports, as one of its highest expenses is oil. So this thing to start off, really strong on the quarter and then completely fall flat on its face as oil rose a lot makes sense. So this finished down 3.61%, and it's a bearish candle. Once again, the shooting star type candle after a strong move. You can look at names like Boeing. Boeing also, that's an outside trading candle. It looks like it's kind of just on the edge right here. So watch out for a potential flush. We'd really like to see this one obviously recover if you're bullish on Boeing. But yeah, it's basically came all the way up to the high of 243 and reversed and closed at the low at 190. Another one here is Union Pacific. You can see here, this thing shot off like a rocket ship all the way to the high of 239, but it closed at 203. And what you'll notice here is you have authoritative candles, and look at the bodies. The range got big, right? So contraction leads to expansion, but in a volatile environment, like a negative gamma environment, you'll notice, breakouts fail, and we saw that take place. So watch for a potential breakdown of the low 199.33, and that could potentially flush us even lower there in something like Union Pacific. On the flip side of that, if we start breaking above the high of this quarterly candle, maybe we want to go take another run on a bullish trend there. If we take a look at something like DE, this is more of an industrial type name, right? Deere. This one's also a shooting star type candle, but just a lot of chop. It wasn't in a clear uptrend with the shooting candle, but you can see it made a new high this quarter and completely reverted on itself, closing at the low, which is not always the greatest sign. Financials is another one. It started moving higher, but closed around the low. You can see authoritative type bodies, and now price action is getting very tight. I'm telling you this because remember, on the bigger time frames, it's the same thing. Expansion leads to contraction, right? Expansion leads to contraction, and price action on the quarterly time frames getting very tight here, which is spelling out potential expansion. When volatility picks back up, it could mean negative volatility, meaning to the downside. On the flip side, obviously, as it tightens up, it could very well break out to the upside. So we want to just pay attention to these levels on bigger charts to give insight to where the move might start and where potentially the move might finish. KRE also, we saw some bullish momentum follow from this hammer candle. The hammer candle, right? We broke above the high, started moving higher. Things looked all good, reverted, didn't close quite at the low, but it was a pretty big reversal type candle that took place. MasterCard, another financial name, shooting star type candle after a nice run up, authoritative candles. Now the body's getting a little smaller, indicating that momentum may be slowing down. So just watch the low, 386.42, to potentially get taken out. These names, the bank names, they're going to be reporting earnings as we previously discussed. So, watch out, because that could spark the next move. Bank of America also saw some decent move up into the quarter, breaking above the high of the prior quarterly candle, but we reversed and completely closed at the low, closing lower than this quarter, 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 and this quarter. So it's been, a while. Back in 2021, a few years here, one of its lowest closing quarters. Schwab also, look at that big reversal candle. So we had a hammer candle. People were excited. We got the pop, but we're in this negative gamma, environment, and we see a lot of volatility. And you're noticing that here really clearly on these larger term candles, and we reverse and close near the low. So it's always important to just at least hold the low of these bigger term candles. Take a look at something like Bank of Montreal also, right? Pretty big, bigger bearish candle right here. It's a bearish, I would call that a bearish engulfing candle, as the body's above the high of the prior body, and it closed below that. And you can see they were smaller, contracting, the bodies were, right? We saw some high-low volatility, but then we actually had a larger body closing, which kind of looks like a bear flag potential breakdown. So Bank of Montreal is also a large market cap name in the banking sector, so continue to watch this one. Another one was the Bank of Nova Scotia, and you can see here also, not the greatest look as it's starting to break down there too. So the banking sector really needs to pick itself back up, or we can see some more problems. We already know, when banks, start to fail or things go haywire, the Fed is typically quick to act, but they've said that they're, trying to fight inflation and do all these certain things. And as it stands right now, what did take place where we start to see the bounce, the Bank Term Funding Program is starting to level itself out now. I don't have that chart, but we'll monitor that in other videos. Lowe's, so home improvement type name, Lowe's, Home Depot you can look at. I didn't pull that chart up, but take a look here as price action's kind of, potentially flagging. We're, slowly channeling up, which is positive, but we closed 7% down on the quarter. So if we can, and it was roughly at the low. So we're talking from a high of 237.21 and we close at 207, which is roughly the low. So if this was kind of just this, end of this move, start to watch the low where we can test the prior low. And if this thing ends up being just, some sort of bear flag like such, I mean, this thing could break down further to potentially go test this prior low there in 2022. Another one is BABA. I know this is a popular name amongst traders, option traders, swing traders, and so forth. But notice here how price action is really starting to coil up here as well. So price action expanded to the downside. And you're seeing to see a lot of candles, the ranges start to shrink, and also the body here start to shrink. So you can see not the greatest looking candle as it was, roughly around the high of the prior quarter, and then closed around the low. So if we start breaking down from these levels, that opens the door to come test this prior low. So be careful there. But if we start to break back up, start to look at this prior area up here, a high, which is around 102.50 as a potential area of resistance. And if we break above that, that could be a very positive sign for something like this name. Another interesting one is Snowflake. So SNOW is the ticker, but this thing broke down, and now we have just a lot of sideways move. It was down 13%. It looks like to be an inside trading candle. So if we start breaking down the low of this quarter, that could spell more downside. If we break above the high, hey, perhaps this is just a period of accumulation. Now we're starting to see some strength there. Another big one is the retail sector. So, we're in this new bull market, but why is retail not, or even small cap names, really following suit? So you have a high here, and we're, basically at where we were at the lows. So this price action is kind of just coiling up, expansion leads to contraction. The bodies are contracting. So I think that we're going to start to see some either big red candles here in the near future or big green candles. We just got to watch the key levels. So for example, the open price, you'd want price to get above 63.55. That'd be more of a positive sign to see price go ahead higher. But if you start getting below the low, just be on guard that, that's not a great thing to take out. A quarterly low could spell that we have more downside. Names like Disney are sitting at like a multi-year low, right? Let me see how many years this was. If I just go back to the screen, we closed, we haven't had a low close since, I guess, really 2014. So that's, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years we haven't been this low on the price of Disney. And this really gives you some insight into, what are consumers doing? Like how, it could be a bunch of different reasons as to why the price is falling. But obviously Disney is a big part of their business is obviously their theme parks. And, what are consumers doing about that right now? You're seeing like retail names take dives. You're starting to see, retailers like Macy's, Nordstrom's, or, Dollar General, DLTR, these, Disney, all these big names taking some large hits, which tells us that the consumer might not be as in good a shape as we think that they are, right? And the market is pricing that in, right? It's a forward discounting mechanism, and it's potentially pricing in something to take place. So we got to be aware of this because it could spell out great opportunities when things change. Now, on the flip side of all these bearish charts, take a look at energy. And we've said this many times on many videos that when energy stocks are leading, it's not typically good for other stock market sectors. And energy closed at a new quarterly high and even hit an all-time high. Same with XOP. You can see, take a look how price action was contracting here. The bodies were contracting, then we got above the high, and you saw that pop. So this kind of stuff happens. These are the examples when we start breaking quarterly highs. Boom, you get that pop. But the same thing is to the downside. If you start breaking down the low, we can get quick flushes. So it's always important to pay attention to see how price responds at those key levels. Look, I went through a lot on today's market video. We went over some big picture charts. We talked about why it's important to pay attention to the gamma exposure levels. Okay, to know whether dealers are in a positive gamma state, negative state, the direction of the 5-day trend. We went over daily expected moves, weekly expected moves, monthly expected moves for the S&P 500, went over what was taking place in the news, and so much more. If you like this type of content, please subscribe to the channel. It's greatly appreciated. And check out the Patreon or Swing Trading community if you want just some more additional content. That's all I got for you. See you later.